All right. Well, good morning and welcome. My name is Nancy Easterbrook, and I'm Executive Director of Silicon Valley Directors Exchange. We're so glad that you could join us today. I know that it is a big day, election day, so we're glad that you can take an hour out of your day to join us. We are happy to present today's webinar, which is the critical importance of IP assets for today's enterprises. I want to thank our co-sponsor Aon, who's helping us put on today's webinar, and it is my pleasure to introduce our speakers for today. Louis Lee is CEO and Global Head of Aon Intellectual Property Solutions. He is also a member of the Federal Reserve Bank of San Francisco's Economic Advisory Council and is recognized as a top 300 IP strategist worldwide. Lori Yoler is an experienced board director and strategist skilled in advising companies and founders in imagining, building, and scaling disruptive technologies. She is an experienced board member of public, private, and nonprofit organizations and is currently a general partner with Playground Global. Our moderator for today, Daniel Siciliano, is a successful technology CEO, founder, and entrepreneur. He is currently chairman of the board of the Federal Home Loan Bank of San Francisco, chairman of SVDX, and a fellow at Stanford University. Today's webinar will be 1 hour long. Our panelists will speak for roughly half that time, and then we will open up the floor to question and answers. We encourage you to submit your questions via the Zoom Q&A feature at any point during the presentation. Additionally, we are recording this session, so we will have it listed on our website in the coming days for future viewing. And with that, I'm actually going to kick off today's session with a poll. So our first poll today is, what percentage of your company value is our intangible assets, such as IP? We've got less than 25%, 25 to 50%, 50 to 75%, or more than 75%. We're hoping to get a little bit of answers so we can figure out our audience before we launch the webinar. So we'll just give it a couple more seconds here.
We avoided throwing in the I don't know as a sort of courtesy and optimistic view of everyone on the webinar, but we'll talk about that too, I think.
All right, so here are our results. We're sort of a mixed bag here, with our highest percentage being less than 25%. Great, and I will actually pass the mic over to Lori, who will give an introduction into how she became part of the patent and IP world. So Lori, I'll pass it off to you.
Thanks so much. Good morning. So I am not a patent attorney, and I thought I would give you my journey because some of it may resonate with some of the rest of you. So I studied computer science and business, and one of my early jobs was at Sun Microsystems, and I worked fairly closely with Sun Labs and noticed that the scientists in the labs were filing a lot of patents, but I never quite understood what we were doing with them. And there was one guy in charge of licensing, but I never really understood exactly what was happening. But there were all these guys who were inventing things and filing patents. And yet I worked in business development, and I found often that when I was trying to go do deals with other companies, and in particular joint development agreements, some of the executives on high told me that I needed to be very, very careful about commingling IP and be very careful about perhaps avoiding joint development agreements and having a really clean line between our IP and their IP, and maybe our engineers should not be actually helping those companies. So then I went to the world of startups, and again, we filed a lot of patents. I was in deep technology companies, but I heard often that, products were what was important in Silicon Valley. It was not intellectual property, and you should only file intellectual property to defend yourself in case someone else attacked you, but going out and aggressively pursuing your intellectual property with others was kind of considered a no-no. So fast forward, became an investment banker, and we worked with a lot of early stage deep technology companies in the US and Europe. And I noticed that in deals where we were often either doing partnerships or selling small companies to large companies, there was a tremendous value that these large technology companies placed on the intellectual property and ensuring that startups owned their IP free and clear. And so I saw how critically important it was, and to settle any patent disputes before the M&A was done and before the larger company acquired the smaller company. So then I moved into the private equity world in a new kind of fund that actually was looking at IP as a new asset class. And I also served on the board of my university, Washington State University, where I met Louis, because we had a lot of IP around, actually it was in Washington, and we had a lot of IP around new apple varieties and a lot of stuff around agriculture. And so it was interesting to see how important it was in the agriculture world. And so then I started serving on boards, and I was on the board of Tesla from day one, and noticed that the automotive industry had tremendous respect for IP and filed a lot of IP, and IP was critically important in the automotive industry. I also served on the board of Zoox, which recently was acquired by Amazon. And I sat on the patent committee at both Tesla and Zoox, and saw how really important it was to ensure that inventions were protected in companies both large and small. And Louis was actually our patent attorney at Zoox, so I got to work with him again, and really saw how you could think incredibly strategically about IP. The other thing I found that was really interesting throughout my career is the difference between industries in terms of how patents were respected. In the biotech world, it was very normal to ask about IP and to even take companies public that didn't yet have product and just had intellectual property, where in the tech industry, there's still a lot of debate and disputes going on around software patents in particular, obviously mobile patents, and it seems that there is a real difference between industries. So in any case, I have spent a lot of time in patents. Most recently, before Playground, I was at Qualcomm, where obviously the business model for cellular innovation hinges on a very significant patent portfolio. And at Qualcomm, it was really important for all the employees to understand IP and patent law and how all of that worked. So that's my background. So I can answer questions about any of those as we go forward, but I just thought that would be a good start to explain both how I got to know Louis as well as how I got so involved in patents.
Lori, that's great. Thank you for that background. I think it's very helpful because I think that does resonate with a lot of folks. One of the observations we have about IP and IP law and IP strategy at the board level and among entrepreneurs is that there is such a wide variance of knowledge and understanding, right? And oftentimes when you find someone with a deep understanding, it comes with a lot of painful lessons along the way. And I think that's part of what we're trying to help reduce both at the mature company level, but also at the younger startup level. So with that, I think I'm gonna ask Louis to jump in and give us his framework and kind of big picture. And for those of you who attend a lot of SVDX webinars, there's a little unusual where we kind of go with these big segment presentations, but after Louis is done, we're gonna walk through a little bit of discussion and then I think flip it over for questions. Louis, can I hand it over to you for that part?
Yeah, you sure can. So first of all, thanks for the opportunity to be here, Dan, and it's always great to work with Lori. I've had the pleasure of working with her for a number of years, as you can hear, and she's one of the board people that really get intellectual property. So I'm a classically trained IP attorney. I'm a registered patent attorney. I practiced law for nearly 30 years before joining Aon. I ran a law firm called Lee and Hayes that grew from just Dan and I to many people. And we represented some really great companies like Microsoft in its early formations, Amazon, Alibaba, others. And we were kind of on the portfolio build out side. So we always knew that IP was really important from a company. But what I'm going to share with you next is really how IP's evolved to be even more than that. And so I'm going to share a screen with you here, I think, if I can. Let's see. Where's that showing up at? Just a second. Can anybody see? It's not showing up. Let's see. I'm going to go share this screen. Tell me if you can see this, Dan, real quick. Whoops, that's not it. Let's see. Can you see the
We can,
piece?
yes. Critical importance of IP assets for today's enterprises.
Excellent. So
Yeah.
one of the things that's happened during my career is IP kind of shifted from this legal document that kind of gave you a protective position into something that's actually an asset class for your business. So we always ask this tagline, how well are you governing as directors the other 84% of your company? And I'm going to explain that number here in a minute and why that's important. Somewhere it happened to me about middle of last decade when I was working with Goldman Sachs. They had a position in a company called Research in Motion. Remember BlackBerries? Those used to be a really cool phone in the last decade. And they were in this litigation, and the stock price of RIM was moving every day because of the litigation that was going on in the Eastern District of Virginia, as well as the patents that were being asserted against RIM were going through a reexamination process in the patent office. And my job was actually to understand these events and try to help Goldman understand how that was going to impact the value of the company. At that point, I was kind of hooked, and I started doing on the side of legal businesses, starting to work on analytics to say, what is this asset class doing and why is that? And so I'm going to give you a quick, really brief history here of the world. Since the birth of Christ, for the first 1800 years, it has been mostly an agrarian-based society, very little GDP growth. Then we hit this, and we had early things. The very first actually instance of an IP story happened in the Venetian statue in 1474, around the Renaissance time, where Leonardo da Vinci could take advantage of getting some value for their ideas. That moved into the UK Patent Act, and then of course in the Constitution, patents and copyrights are actually in our US Constitution. The year after the Constitution was signed, we started our patent office. So the Patent Act came out in 1790. That was just in time for this industrial revolution. We started seeing GDP pick up. For the first time, you could create wealth outside of owning land. You could create wealth through ideas. And so we started counting patents from that 1790 act. And you can see that we were moving slower, we're more and more quickly to a manufacturing-based world. And then now we're into a global innovation-driven economy where innovation is extraordinarily critical. And so it's just to show you how critical and how important that is today. Innovation is flying at a pace that we've never really seen before. It took us 121 years to mint our first million patents. So the millionth patent was issued in 1911. Today, we are issuing patents at a rate of about 1 million every 3 years here in the United States. China's minting patents at about 1 million every year to 18 months. It's very, very fast clip. And why is that? It's because every company today, every industry today is under disruption. In fact, the number of CEOs today that will actually say, we're a technology company that also does banking, or we're a technology company that also does pharmaceutical sales, or we're a technology company that also does mining. You hear that all the time. Technology is really important, and this innovation is key. In fact, most CEOs will claim, innovate, innovate, innovate. It's our lifeblood. It's innovate or die, and that's the mantra. Well, I'm here to tell you innovation alone is not enough. You actually got to convert that innovation into an asset class. That's where intellectual property comes into play. It's the only way to legally convert your innovation, your R&D spend into something that's meaningful. And as a result of that, as a result of us moving into this global innovation-driven economy, we've seen a historical asset rotation from tangible-based assets into intangible-based assets. Over the last 40 years, in fact, if you go back to 1975 and you looked at all the companies in the S&P 500 and you looked at the value of their assets, you would find that about 85% of that value was tied to tangible-based assets of land, plant, and equipment. Today, that's completely inverted. Today, it's about 85% of the value of your company, or 84%, as I said on the cover slide, of your value is in intangible assets. In fact, maybe the most symbolic move happened in late September, when, as you look across those last decades, you see ExxonMobil always appeared to be a top 5 most valuable company throughout these decades. And last September, just a month ago, they were removed from the Dow and replaced by a company named Salesforce.com. So you can see this rapid innovation that's happening, and companies that are developing intangible assets are getting rich valuations and moving on quicker and quicker. And so that's really accelerated over the last 10, 15 years or so. As a result of that, intellectual property has become extraordinarily valuable for an entirely new reason, not just because it can defend your product streams, and not just because maybe it can be asserted or licensed, but because it infuses value into your companies as well. And that public markets and investors are now starting to look at that. So as part of this process, one of the things that we've been doing at Aon is building out a set of analytics tools, because one of the challenges we've always had along the way is, how do you measure that? How do you measure your patents and your copyrights and your trade secrets? How do you measure them for value or quality? What does that even look like? And having run a law firm for 30 years, that's a very difficult proposition for most attorneys. That's not something that we are designed to answer. And it turns out a lot of accounting firms aren't really designed to answer that either, because this involves a lot of challenges. So if Lori had asked me, for example, gosh, what's the value of our LiDAR system IP here at Zoox? And could you compare that to the LiDAR systems IP stack at Waymo and others? That's not a question that law firms or accounting firms or anybody's used to handling. But we wanted to tackle that problem. And part of that problem is really understanding how you get at the asset class. So I'm going to take patents for just a second. One of the things we started to do is we slowly started to build a platform, which we affectionately call IP Genome Platform. And we're one, and other people are building these things as well. With the advent and the advancement of AI-based systems and natural language processing and machine learning, you can actually tune these things to start to understand IP, at least at a level that attorneys can, so that we can take some of this yeoman work, some of the stuff that took too long to do, and shorten that time frame. Imagine if you could get high fidelity and timely valuations of IP that were repeatable, and you could get them at speed and at scale. If you could do some of those things, there's a lot of things you can do with that. For example, you can start to build out the right type of IP that's aligned with your products and services, that has great geographical alignment. You can actually use it to develop the future IP around your future product lines, et cetera. You can also take risk off the table because you know it's so much better. And there's a lot of IP risk out there. In fact, when we did surveys, among the top 3 challenges that most CEOs suggest is the risk of losing IP, and particularly trade secrets. Trade secret theft is a huge challenge today for a lot of companies. And that's not just from cyber attacks. It's actually most often lost just by employees leaving and going to another place of work. Not even rogue employees, just employees that pick up and move, and they didn't even realize that they had trade secret knowledge in their head. So those risks are real, and they're real damaging to companies today. And finally, if you can measure IP, you can actually get access to capital. And so there's this new movement too to get debt financed capital, debt structured capital for growth stage companies that are using only their IP as the asset class. So as you start to figure out ways you can monetize and infuse value into your businesses for investors or for public markets, as well as take those risks off the table, and then maybe even leverage those assets for value, you can see there's a enormously new way of using IP and thinking about IP. And that's why we're having this conversation today with you all. This is a strategic level, executive level decision-making process that is going to require, into this global innovation-driven economy, it's going to require boards and board members to have a real good handle and understanding of this asset class, which infuses 85% of the value of their businesses today. With that, I'm going to stop sharing and pause for a minute, Dan, and pass it back to you.
Perfect. Thanks. I think that was a great laying of the groundwork. Let me ask a big picture question with what both of you have mentioned as the backdrop, and that is, clearly this is an issue that is strategic. It's critically important. A failure can be an existential risk to a company, and it might be non-obvious to companies who've been around for a while, who over time have accumulated a great deal of value in IP assets and may not even realize, for example, that a lot of value is being derived from trade secrets. And so in the way you mentioned, Louis, you have a departure and you can have a real cascade of damage in a way that may not be obvious or just front and center. So my question to you is, from a board level viewpoint, how is it that you make sure that this is elevated to the board, and not just as a matter, and Lori, I know you'll speak to this, and Louis, I know you've mentioned this before, as a matter of legal, right? Or audit. Like the traditional path is, hey, here's the audit committee, we're covering these matters as a kind of a check the box, or legal comes up and says, here's the latest, here's what we're doing in terms of this front or that front, but rather as a strategic matter. How is it that you can help boards and board members elevate this to the level that you think it deserves? Do you have suggestions?
I can start if you'd like. So I do think it is typically considered a legal matter. And if there is litigation, it's generally discussed first at the audit committee. And then if it's significant, raised to the full board. But often, because it involves lawyers and potentially litigation, it's often kept very very close to the vest, so to speak. Where it typically comes up in board discussions are around M&A. I think when M&A is being discussed, it is a perfect time to say, so if you're on the board of a large company and you're making an acquisition, hey, what is the IP position of that company that we are acquiring? Is there any pending litigation? Do we have comfort that they own their IP free and clear? Is there potential litigation from competitors? And have they done anything to catalog and put a ring around their trade secrets? How are they handling trade secrets? How are they handling copyrights? How are they handling all of their IP assets? And you often also get into open source, of course, saying, okay, where is open source? And we'll run a scan on their, if it's a software company, run a scan on their source code. But I think M&A is a great time to start having that conversation. The other place that's a great time to have the conversation around trade secrets in particular is if we're looking at cyber risk. Sure, there is the cyber risk of someone coming in from the outside and perhaps hacking our systems, but don't forget, it used to be, and I think it's closer to 50-50 now, but it may still be more inside risk than outside risk in most companies. What are we doing to ensure that employees don't take off with trade secrets? How are we monitoring it? How are we measuring it? And it's a very tricky discussion because some employees feel very strongly that they don't want to be monitored at work. And so that is a board level discussion because it is a big policy discussion around what are we doing to monitor and manage trade secrets, and what is our policy, and what stance are we going to take, and what stance are we going to take if employees either willingly or non-willingly take off with trade secrets because we haven't made it extremely clear where the boundaries are and what our expectations are.
That's very helpful. And I think I'm going to dig out a few more details as to like how you achieve this on the ground. But before we do that, I want to go to you, Louis. I'd encourage you to say whatever you're going to answer to my prior question. But I was reminded just now by Lori of something you said, which struck me and gets at this issue. And that is, you thought that prudent boards, and you've provided this service before, would sometimes engage your type of services or just smart IP evaluation services when they were thinking about doing a stock buyback because ... And would you tease that out for us? Because I thought it summarized so many of the strategic elements around intellectual property and the way a board can either kind of miss the boat or really maximize. Would you kind of explain why that would happen and then what that derives from?
Yeah, great question, Dan. I think part of this, it evolves from the fact that boards haven't traditionally felt comfortable asking about IP, right? It's this expert category that usually a general counsel, and the general counsel is going to pass it to a chief IP officer. And it just kind of felt like you just didn't have that answer. And my brethren, as patent attorneys, we don't really talk finance language. We don't talk business very well. We usually talk about scare things like infringement and risks and stuff like that. But so those questions tend not to get asked. And to Lori's point, these are questions that should be asked. They should just be part of our conversation. As you saw from the last poll that we did before this, only about 24% said the value was more than 75%. So I think there's this big disconnect of how valuable this asset is and how important it is to running the business. So when you're getting to the point you're asking, Dan, if you start to understand this as an asset class, there's lots of critical things you can do in addition to just asking, what do we have covering this? Or do we have a good program? One of the things you can do now that you can measure is an example of, listen, we're spending X number of dollars a year. Let's say we're spending $500 million a year in R&D. That $500 million in R&D should be buying something, should be buying and being manifested something. It turns out when you're doing that R&D, that's manifest in intellectual property, right? You should be able to measure how many trade secrets, what kind of know-how, what kind of patents am I getting out of this? Code, schemas, data sets, et cetera. What am I getting out of that spend? And you can start to answer rational questions like, okay, should I spend another $100 million in R&D, or should I buy back stock with that instead? What's my return if I do it in R&D? And what's that progressive, the type of IP I'm going to cover? Is it going to cover future products even better? I mean, one way to think about it is your IP is not only is covering not only what you're doing now to put that fence around it so you can get those revenue streams and hopefully those profit margins. But if you do this right and you put stakes in the ground out into the future and you proactively think about your IP strategy, that gives you a tremendous freedom to operate, which a lot of companies today don't enjoy. They get going down a thing, they find out, then they retroactively try to apply patents later on, and often it's too late. So the idea of making this a strategic part of your conversation, you can have finance questions like that. What can I get out of it? If I apply this money here, what's the value to my business? What kind of value do I think I can show investors in public markets?
That's great. And before I move on to a follow-up question, Lori, did you want to add a little bit to that? And particularly around the tactics of you're a board member or you're an executive and you want to elevate how the board actually engages around this. So you mentioned already M&A. It's an obvious lens. It's almost necessity, right? I mean, it's part of diligence. You articulated that. But what about getting the board to really make it, you know, a half a day of a 3-day strategic board retreat, or to have the discussion that Lewis just mentioned, which is we have several choices about forward-moving investments. You know, let's talk about what IP does for us. How have you actually provoked that deep conversation on the boards on which you serve? And I know, and you serve on a wide, you have such a fantastically wide variety of boards. You have kind of non-techie boards to a certain extent. Everything's tech, and I know you believe that, but kind of the non-techie side all the way to the very deep tech. Like, obviously it might be, or maybe not obviously, it might be different across the different type of board, but maybe give us a few examples.
So if you are in a startup in a deep technology area, it will probably be discussed quite a bit. In the case of Zoox, we were very fortunate that Dan Cooperman also served on the board with me and had a tremendous background in IP. And so it became easier to have those discussions. But it took a while to convince many of the engineers how important this was, because there is a prevailing wisdom that if you're really cool, your product sells itself, your product is so great that you don't need IP. And so fortunately, there was a lot of wisdom, and Dan and I and others on the board decided it was really important to have a tremendous chief IP counsel as well, who came in and really brought incredible knowledge and stature and wisdom around IP. So it was very obvious that it became a board level topic. And although, you know, the plan, as it never is litigation, it was understood that we were doing a lot of inventions and therefore protecting IP was very important. So one of the things that really helped us was having an IP savvy board to start with, and to continually educate the entire team in the company on the importance of IP and why it was important, and that it wasn't just a litigation instrument. It was actually protecting all the hard work that the employees were doing. From a large company perspective, it really depends. And as you said, if you're in a non-tech company or lesser tech company, IP may not be as important. But if you're dealing with, if it's not what we consider in Silicon Valley, really hardcore tech, maybe it's biology and chemistry, and maybe there is some new product where there is something in the biochemistry that's really interesting and that you'd want to protect. And so again, I think the easiest times to bring it up are during the cybersecurity topic, and really expanding that to say, no, this isn't just tracking the number of incidents. This is really talking about how we protect everything that our employees are doing. And then obviously, boy, if we're going to acquire in some place to fill a gap, you know, if we're looking at acquisitions, do we think about, do they have IP that really fills a gap in what we're looking to expand into, and areas that we're looking to expand into, not just on products. And one of the big misconceptions is that patents protect products versus patents protecting all of those inventive ideas that are going on in the company, and all those inventions that may or may not be products yet.
That's great. Let me extract a couple of takeaways, additions, the clear ones you stated. One is I like this idea that framing it for the board and management, that this is a way to support the very hard work of, employees and engineers and others in your organization is one way of thinking about it, as a way to elevate it to the kind of the board level. And then let me throw out, I'm on record as not being a huge fan of hyper specialized board members, but I would suggest that what you described as a savvy board member is not the same as pulling in a cybersecurity expert, for example, or a marketing expert, but rather someone who has a broad enough background to be sophisticated to ask great questions. And a shout out essentially to Dan Cooperman, right? Who he's the only guy I know who could manage to be a successful GC at both Oracle and Apple, right? So it's a special guy, but someone who has like the JD MBA background with like strategy and law. I mean, that's a really great type of board member. I don't suggest filling your whole board with those folks, but a few goes a long way. Let me maybe ask Louis and Lori, feel free to chime in. What are the right steps to educate your board to get them all up to the same level? So there's one thing, which is motivation and attention to matters, M&A, supporting your employees, looking at a strategic asset class. But then there is this gap where, reasonably speaking, boards may not feel that they're up to speed. What are a couple ways you can get everyone to at least kind of the intermediate level so that they're able to engage as a whole board and not just rely on Laura Yu and the Dan Coopermans and the Louis Lees of the world?
Yeah, it's a great question. I think, Dan, one thing is running sessions like this. First of all, it's usually just a matter of awareness. I find that most directors, when we have these conversations, there's this implicit understanding that, our IP's, it's important, right? And people have this conception that we've got this IP, and what they really mean is, we're doing something, I'm investing dollars and we're making some tech, so I must have some IP around it. And that's the kind of level of awareness they get to. They don't get to, oh gosh, I actually have to take steps to convert that, and I got to make sure that we're actually doing that. So usually it's kind of a conversation to get the awareness level out. I find that chart I put up with the asset rotation is usually this aha moment for most board members. Once they see that, they go, yes, that's what I've been feeling. I just had never put numbers to it, so that makes sense. And then the second question is, okay, now what's the next step to that? And then that becomes an education piece, Dan, right? Usually a quick conversation with somebody like myself or Lori or other people on the board, just to say, okay, these are some questions you can start asking. It just starts with asking questions. How are we doing in this area of protecting this stuff? How are we doing relative to our R&D spend? Are we getting the right types of things out of it? It's not a lot to get going there. What's going to happen though is this is an area that's not going to go away anytime soon. So don't think of this as a specialty one-time thing. Once I ask it, it's going to go away. Right now, we're going to see in the next 2 to 3 years, or maybe even sooner, ratings companies. You're going to see Moody's or for public companies, or S&P Global. Or you're going to see PitchBook for private companies. And they're going to have whole sections on how well companies are managing their IP. And the reason they're going to have this, there are going to be benchmarks out there. There's going to be ways to measure this that will eventually start to tell the boards or inform them even more, what things should I be paying attention to, and how is this going to work? How am I going to benchmark against everybody else? One of the great things that Lori and Dan did at Zoox is they actually installed a really sophisticated IP department that resulted in a very significant IP portfolio that helped consummate a pretty sizable deal. There are other companies in the Valley right now that don't have revenue, that have been in this autonomous vehicle mode, and they don't have near the IP. They might have some really cool things going on, but what investors want to see is, if I buy this or if I invest in this business, what do I get out the other end? Let's assume that we're not successful. Is there anything at the other end that I can sell this for? And I'm telling you, with the movement of making these investable assets, with the ability to do IP-backed lending, there will be securitization in the not too distant future. Because of all of that, this asset class takes on a whole new realm for a director to be thinking about, because these are assets that will survive this executive team, or that will survive maybe even things go into default. When Nortel went down, the IP survived. When Kodak wasn't doing successful, the IP survived. So building that is something that's going to take on greater importance and meaning.
So the good news about that, Louis, is that you've described a function that is considered central to the role of the board, which is to develop a method and means and a normal flow of information to come to the board for purposes of evaluation and review. And maybe there's some steps to get the board to a position where it can understand it well. But the good news is that you've used all the common language of reporting, which is KPIs and benchmarks and assessments, and maybe given a very valuable prediction, which is this is only going to accelerate and these expectations are going to grow. And so maybe boards can get ahead of it now by really digging into what they think for them are the right KPIs and benchmarks, so that they'll be perhaps better situated when, dare I say, the Glass Lewis's and the ISS's, not to mention the PitchBooks and the others of the world, start doing that a la ESG, right? I mean, I think all else equal, it's a good thing when there is some standardization around expectations of reporting. It can be taken too far, but it looks like you've described the writing on the wall. Lori, did you want to throw out anything along those same lines?
It took me a while to really understand IP. And as I said in my intro, I was around it all the time. I kept seeing we were filing IP and that it was really important and that we were inventing and therefore we should file all these patents, but I didn't understand how patent law worked. And so I started attending a number of sessions at law firms, but I'm not a lawyer. So at the time it felt kind of weird. In fact, I would almost always be the only non-lawyer in the education session. And a lot of people would ask me, why are you here? But I felt it was so fundamentally critical for me to understand it because because I kept bumping up against it in all of my different roles, and because it was very clear to me that in M&A transactions, it was going to be very important. And as an investment banker, as I said, when I was working with startups that had engineered something tremendous and had invented things, they often had a lot of trouble describing their invention and describing what was unique about it. And what patents help is to say, yes, this is unique. I've received a patent. I've looked at the other IP around this, and I know that this is indeed unique. I've cited the other intellectual property that may be around the area that I'm patenting, but I know this is unique. And to be able to learn how to describe that to a buyer is critically important. And so I kept seeing it. I kept bumping up against IP in pretty much every role I had. And so I will say it took me a while to get educated. It's not typically in the courses for boards. There isn't typically a module on understanding IP law. And so I think it's really wonderful that SVDX is covering this topic, because many people learn on the job and many people learn because they screw up. To be perfectly honest, because some litigation comes in they didn't expect, or they get involved in some messy trade secret battle, or something happens and suddenly you wake up and your law firm comes in to tell you why this was bad. But it would be great, as Louis said, to get out in front of it. And so maybe education for the full board. In Zoox's case, IP was covered at every single board meeting. It was a section in every board meeting where we found out, how are we doing? Where are most of our inventions coming from? What are the places where, we had a large engineering team, and it was great as a board to say, okay, where are the areas that we're really filing a lot of IP and feel that we're really out in front and doing things that are incredibly unique. And that was great to hear. Where's the value? We've hired all these engineers, and of course we were pre-revenue, and it was really tremendous to get an understanding at the board level where the value was, which really came in handy when we were raising financing, because investors wanted to know what parts of what you're doing is really unique, because of course there were others in the field.
That's great. I will put in a short, before we switch to some of the questions, we've covered a few, but put in a short plug for, there are a few directors education sessions and programs that do cover IP strategy as an asset. And I would be remiss if I didn't mention, I have some loyalties here, of course, Directors College at Stanford, where Lori, you've been on that panel, others have been on the panel, but whether it's led by Professor Mark Lemley or Lisa Ouellette, they cover IP as a strategic asset and IP strategy for the board. So it's worth seeking that out if people are looking for that type of content. It is out there. I would say it is not as common as it should be. You mentioned litigation, and I want to switch gears. We've gotten a couple questions that go something along the lines of, So what about tying the hands of our engineers? If you go, very aggressive patent portfolio for your company, don't you run into problems where, they can't go anywhere? And I will observe that, of course, as most of us know, the culture in Silicon Valley is one of sort of free flow. In fact, the, economists among us, we've identified very clearly that in addition to things like strategic immigration and some other items, this free flow of people and talent really has been one of the key ingredients of the secret sauce of the Valley. And so my question is multi-part, which is, there are a lot of misunderstandings about what you can and can't do, what you can look at, what you can pay attention to at a competitor, what happens when you go away. Louis, you already bracketed one end of it, which is, don't get hung up on formal IP. You've got trade secrets up the wazoo, and if you never train about it or talk about it, you might have an inadvertent loss of trade secrets. That's one end. But I've also heard you both say, that you've experienced environments where people said, "Oh, don't look at the competitor. Don't look at any other patents. Watch out. There's a problem there." Can you expand on the scope of appropriate strategic behavior around companies, their employees, what they should and shouldn't do around all these anxieties, frankly, about patent infringement, paying attention to your competitors when you move on? Give us your rundown, because I know it deserves its own 1 hour, but we've gotten several questions that touch on those ideas.
They're great questions, and it's a tough mix, and I know it is part of the secret sauce down here. Obviously, taking that stuff around. I think the challenge that most people have is they kind of identify the problem, then they never apply a fix. They just kind of say, "Yeah, it's a real problem, so we're not going to deal with it. We're just not going to touch it because I've raised it as a problem, and that's what it is." Even trade secrets, if you think about it, so you go to work, and an employee A goes to work for a company, and the employee is paid to innovate. Okay. During that time, and every time they're there, they're innovating, and most of their innovation results in some form of IP being produced. Even if we say it's the most generic form of know-how, right? So you're either knowing how to do something better, or you're knowing not how to do something better. And if your competitor has to at least spend some equal money to come to the same conclusions you're coming to, right? So there's some IP being generated there. If companies did a good job of actually managing their trade secrets, now trade secrets are pretty easy to get, right? They just have to give you an advantage by not being generally known. And companies have to take affirmative steps to keep them secret. What does that mean? Well, they need to actually catalog their trade secrets, identify what they are. And when they go to collaborate with other people, kind of say, "Hey, these are our trade secrets. We've already identified and understand, and we're protecting, and we're going to share those with you." What happens most of the time is people don't catalog them. I go in, Dan, to a lot of places, and I'll sometimes go into the boardroom and I'll pull up a chair and I'll turn the chair over, and I'll find that the chair has a label on it, a physical label. So somebody in the company has taken time to physically tag a chair. And I guarantee you that if I walked out that chair that day, that company does not fall apart, okay? But they've never taken any time to actually tag and identify a trade secret. I don't know why, but it's far more valuable because if the person walked out the door. Most of the time, trade secrets cease to exist. And that's the problem with trade secrets. They cease to exist when they're not generally, when they're not secret anymore. And so a lot of times, when you're having your entry interviews and your exit interviews, if you just had a documented approach to this and you said, "Hey, I know you're going to our competitor. I want you to know these trade secrets you worked on to the best of your ability. Don't use these trade secrets. You know that we're protecting them. Here they are. And you're under an obligation to do that." A lot of times people will go, "I've got this knowledge. I'm going to go and I'm going to help improve something else." But they're much more careful about doing things that they didn't. But it also showed that the company is caring about it as well. And so that's one way of just stepping up and addressing it. It's the same thing on the patent end of the spectrum. We've heard that, "Hey, don't look at anything anybody else is doing." That stems from a kind of a misunderstanding of how litigation works, that we're all worried about something called willfulness, that if we see other people's patents and we build something and we're accused of infringement, the fact that we knew about them must be some evidence of willfulness, and I can get treble damages if I'm not careful. Well, that law has obviously softened quite a bit over the years, and it's changed. It's never been a standard that knowledge equals willfulness. You actually have to have some willfulness, hence the word, intent and action to actually make copies and do something about it, that you are actively willingly infringing something. So pure knowledge doesn't happen. Again, if you're running your department or running your company well and you're advising your company, get things in process, talk about them, get our trade secret program in place. Look at the IP out there in the world, so you know that you can actually make a stronger argument and say, "Hey, I'm aware of all the IP that's going on out there because I'm trying not to infringe other people's, and we're trying to find the pathway for our company to be highly successful." So there's a lot more tools today. And I guess the last point, Dan, I'll make is it's really hard today to say that you don't know about somebody else's IP. That in our day, even on simple searches on Google, you can find patents owned by other companies. That's not going to fly too much anymore with juries today. They're just not going to believe you.
That's great. Lori, I might ask you to argue the other side or the careful threading of the needle around company culture for employees that encourages their development, their know-how that they can then, perhaps someday move on. And I ask that because, you've been on the company growth side a lot, and you're known as kind of a person who can recruit and retain great talent. And that must be a part of the conversation for great engineers, I assume, which is someday you may leave here and we're not going to like bind you so tightly that you'll never be able to do whatever it is we're doing now again. Could you talk about maybe some of your experiences about striking the right balance? Because I think Lewis just gave us a very good rubric for being smart about trade secrets and of course patents. But some skeptics would say, oh my gosh, if you execute Lewis's idea perfectly in that exit interview, you'll realize that you need to go from being a whatever engineer to like serving food at McDonald's because you can't possibly do it, right? And that's an exaggeration. That's not true. But how do you balance that? That feels like an important piece of the company culture and communication around the IP strategy.
I'm glad you're bringing it up. I think it's part of employee onboarding and part of employee offboarding. And one of the questions that's come up to me a lot as a board member who was considered more accessible to some of the employees is, well, hey, I know I'm engineering this here during my weekdays, but on the weekends, I want to invent blah, blah, blah. And so I will sit down and say, while you were employed here, your intellectual property belongs to the company and we're going to file patents around it. And, I find it hard to say, okay, but you're going to spend the other half of your brain on something that you're going to own. And so clarity in the documents when you are, and in the communication when you're onboarding employees. And then when you're offboarding them, it's also, hey, while you've been here, we have owned your intellectual property, but when you leave, and if you want to invent other things when you leave, go for it. But you don't take what you invented here with you. You obviously take your brain, but we're paying you tremendous, hopefully tremendous salary as a Silicon Valley engineer. And while you're here, we want to retain your inventions for the company's benefit. And I think stating it that way and really educating the employees is critical. If you are a company that says, hey, we're happy for employees to do stuff on the weekends and invent other stuff, that fine. But, you probably need to make sure that, again, you as a board and you as a management team understand what you're going to communicate and what you're not going to communicate, because otherwise it gets very confusing for employees, to be perfectly honest. And they're saying, wait a second, but it's on the weekends and it's at home. It's not on site using equipment on site. And, I have my home chemistry set and I'm doing stuff in my bathtub at home, so it should be fine. And, literally it came up to me where people said, hey, can I use our patent attorney for my own inventions on the side? And no, actually, the other place it gets very confusing that we should discuss is university professors and university students. So I'm really excited because we're going to hire this amazing batch of university PhDs and or interns or whatever over the summer. And they're in this lab that's related directly to what we're doing in our company. And we're going to bring them in for the summer to work on our stuff while they are still at the university. Does anyone on the board ask, so who owns the IP? If they're still part of the university and they're in a lab that's directly relevant to what we're having them do over the summer, who owns the IP over the summer? Has anyone talked to the university, or are we just going to keep it quiet and hope no one notices?
Yeah, I always joke that I really like those 2-for-1, compliance violations where you have an unpaid summer intern for no academic credit who's a graduate student at a leading university. You manage to pull up a wage and hour violation, probably a county and city violation if you do it in San Francisco, and you've got IP problems all in one. Like, it's a really efficient way to stumble. But to your point, Lori, I think, again, if you can elevate the thinking around IP to a strategic senior level, you build in systems. And I liked what you really said about expectations. I think that the place where employees, especially high value, high talent employees, often engineers and folks who may not have had an opportunity to be managers or strategic P&L managers, so they don't often have an immediate sense of the big picture. The place where I've seen them become really upset, now mind you, I spent a lot of time in the smaller company space, not counting banks, is when they are surprised or they've misunderstood or things were not clear, right? And so I think to your point, again, it's reassuring. It's kind of classic corporate hygiene, which is clarity, documentation, onboarding, consistency, offboarding. So that's I think hopefully good news to people listening, where it's you don't have to invent anything new. You just got to kind of pump this through the system. Let me, if you're willing, let me switch gears a little bit and ask a question in a different way than our prior conversations. I had said, what's something that bugs you that people get all hung up on? We already addressed one of them, which was, look away from others' intellectual property. That now we understand that better thanks to Lewis's explanation. But then there's also the, hey, don't bother patenting software, don't bother with IP. But I want to generalize it from a question we got that goes something like, there has been an evolution about what software means, and it's getting pretty complicated, right? So I'll say, for example, tapping Lori's example of, an employee or graduate students work on the side. I come across a lot of amazing PhD students who will speak to the work they're doing in machine learning and fine tuning of algorithms as if it is their child. Like this, I've been working with, it has a name, it's been in place for 2 years, and they talk about last week's progress. I could be talking about my toddler, right? And so there's two questions here. One is, in the world of patents and other intellectual property around software, what should we be thinking about if we're thinking clearly? But then there's this new emerging world of artificial intelligence, machine learning, like this kind of whole quantum leap in complexity. And I wonder if there is a different way of looking at that strategically. And I have a couple of follow-ups that have popped up, which I'm happy to ask. But let me start there. So software, and then the quantum leap to AI, machine learning, other areas of similar note.
Great question. Thanks for whoever wrote that. So as my background, I think I shared, I'm a software attorney. So I spent, in fact, when I first started drafting patents for Microsoft in 92, 93, software wasn't even patentable. That slowly became patentable by the mid 90s when a series of case law went into there. And then we got a little wild with business methods and all sorts of things. So, but the software has always been this interesting space for me and trying to protect. And really, today, as things have also moved, traditionally, I usually get the question, what's the difference between a trade secret and a patent? Which should I be doing, especially in the software realm? And that always turned around discoverability. Almost always, if something's discoverable, if you can reverse engineer a chip or you can see the code or something, then you probably need to protect it with a patent. That's usually the trade-off. Otherwise, keep it as a trade secret. The cool thing about trade secrets is that they have infinite duration if you can keep them secret. We all know the Coca-Cola formula. Infinite duration if you can keep it secret. The challenge is, statistically, the trade secrets become generally known within 3 years. That's typically the average of trade secrets. So it actually moves pretty quick a lot of times. But in this cloud-based world that we live in today, it's so much easier to keep things secret and it's not discoverable. It's very tough to understand what Amazon's algorithms for recommendations might be doing. We don't really know what the code is. So the thing I usually try to preach to people is you can also try to have your cake and eat it too. There are things that you can rise to a patentable level at a level that people can understand and track, kind of a thematic level, if you will, and then also keep some of the underlying stuff as a trade secret. Now, I'll use the recommendation engines as an example. So we all know that Amazon has tremendous recommendation engines, that if I buy a book, all of a sudden I'm getting ads for toasters. And I don't know why. I didn't say I wanted toasters, but apparently if I read this type of book, my genre fits and I get toaster ads. Well, you can actually try to patent how that behavior works. So it's a function of something like this behavior of click-throughs, how much I've laid on something, et cetera, how my profile goes with other people in their 50s and white males, et cetera. And they can figure all this stuff out and make some stuff. So I might be able to patent at that level. At the same time, in trade secrets, I might want to keep the algorithms and the weighting functions completely secret. I might say that the function is actually these variables here, and I'm weighting them this way, and I'm going to tweak those weights probably every day, and maybe every hour, maybe every minute. And so it's constantly shifting. And so those things you can keep as trade secrets as you're going. In fact, some people have talked to us about, every time you check in code anymore, can you check that also into a trade secret registry? Because every day you're updating code and you check it in at night and you say, hey, I'm done with this. You could check that. There are probably trade secrets in there that helped you do that. You made it more efficient, more effective, et cetera. So that's how you want to think about at least that part of it on the trade secrets to patents part. Dan, I forgot the second part of your question. What was it? I was going to go to that in just a second.
I was just going to talk about where AI plays into this, but you sort of tackled it a little bit.
Let me go just a little bit farther on that, because I've actually had the privilege of working with a lot of AI experts across the different places in this. That gets really interesting even more, because we're actually teaching, and where it gets a little challenging is, what are we actually doing to make the computer, to actually write the original AI-based stuff, or the original part? And then what is the computer on its own innovating as part of the AI piece? And that's where it gets even a little bit more trickier, right? Because you can do that. I can train my computer, for example, to write patent applications. And then in the end, the computer's writing the patent application. I'm actually not writing it. So is it getting credit for it? Is that IP that it's throwing out? And in the future, we're going to have artificial intelligent development of IP, right? And so that'll probably most likely be protected through a trade secret type process as we're going through it. And it all plays into, of course, how good your company's doing, the brand that it has behind it, et cetera. And so it infuses values across other types of asset classes.
We frighteningly, in the economic world, refer to that starting recently as the leakage of labor into the total returns on capital, where your computer starts doing what you did, Lewis, and it's capital, so returns on capital consume all of labor. But that deserves a whole different session, which we'll bring around at some point in time. But maybe, Lori, did you want to chime in on this at all? And then I'm going to ask you kind of a final roundup question as we wrap it up.
I think if you look at machine learning, it is the application of software either to physical AI, actuation and robotics, or virtual AI, which is software going around making things happen virtually. So I think regardless of which one it is, if you're doing something novel, you should be talking to a great IP attorney to figure out how to protect it. But I think there's an interesting, one of my colleagues brought up recently that there are the two different kinds of AI, virtual and physical, and we should think about them differently from an IP perspective, because one is in the field of actuation and making things move, and the other is more in the virtual world.
And back to your original point, which is attentiveness to this at the senior levels of the company on an ongoing basis will help you perfect the language, parse these things in the right buckets. Here's my final question for both of you, which is, if you had to pick a single takeaway for today's participants that you hope they implement either today or this week, what would it be? Just one thing I hope you go back to your boardroom or your company and you do. What simple, maybe not simple, but straightforward admonition or suggestion would you give them? Lewis, can I have you go first, and I'll have Lori wrap it up?
Yeah, it's in the title. IP is a very critical asset class going forward. It's not going to get any less so, and it's measurable. Start asking questions.
That's great. Lori?
And I would add on, get educated, suggest an education session on IP for the board, and then suggest a strategic discussion about what are we doing about IP.
Well, those are both good closeout pieces of advice, and they were enabled, of course, by Aon. So, Lewis, special thanks for Aon being a co-host and a co-sponsor for this type of content, where our favorite types of sponsors, which are almost all of SVDX sponsors, of course, bring a lot of talent and knowledge. And so I had such a good time today. I want to thank you, Lewis, and you, Lori, of course. You are free. We're gonna have to make you an honorary something. You keep showing up and doing such great webinars for us. So thank you both for spending time today. And thanks to the audience for dedicating an hour out of an otherwise distracting day, I suspect. So thanks again. We'll see you all soon.
Thank you.
Thank you, Dan. Thank you all. Thanks, Lori.
Have a good day.
Bye.